Good morning, everyone, and welcome to the European crossover webinar, and welcome to NFP Day. Obviously, the big, what they call the big granddaddy of reports, have for NFP non-farm payrolls. Not any other than right now we have Italian retail sales that the data hasn't showed up yet, but Italian retail sales. Then we do have Mexican headline inflation at 7 a.m. Eastern. I'm on Central Time, so that's why I'm showing this. Also, correspondingly, like I said, I'm Central Time, so it's 7:30 in the morning for non-farm payroll, but it's going to be 8:30 Eastern. Non-farm payrolls, they're looking for 160,000. I saw a copy. I think it was Forex Live is the one that had it. That was showing various levels from the different houses for non-farm payrolls, and most of them are along this line. They were varying between 160 might be a little bit on the low side, but it's really between 160 to 175. A bit of a surprise once again when you consider where ADP was, because ADP, very strong ADP. One of the things we talked about, hey, be careful because they may go on and look for. If the market was looking for that big high number, we would be disappointed. But really, the market's looking for numbers right around this 160, 175. If you look here on the euro, it's continuing to break down. And once again, we had talked about the head and shoulders, and we've got that target in place, which is 119. I mean, 119, 919 for the head and shoulders target. Certainly looks like we're on our way. I know Amanda's got 897, so Mox Nix, we're in the same area. A 20 pip area that we're both looking at. But as I mentioned in the analysis yesterday, was that actual it came out, retail sales came out here at half percent. Was it yesterday? Not yesterday, but the day before when we closed below sub 1020 in the analysis, I put, hey, that seals the deal. We're going there, to the head and shoulders target. One of the things I cautioned about yesterday in the chat room is that, we had our bias chart support at 966 and the low was 964.2. So pretty good because within 2 pips. And we started to move off of that. And I did see some people pick it up, but I was, provided the warning as, hey, look, just let you know is that, hey, we're closing above our bias chart resistance in the dollar index, which is 98.42. And that opens up a door for the move to 99.70. And certainly we're on our way. You see what I'm saying? If you look at this, we actually rallied up to 98.57. And where did we come back to? We came back right here to 98.42. And now we're pushing up higher for 98.59. So just some food for thought there. Certainly on our way higher with this cash dollar index. Looking further in, we do have Canadian employment also. Reuters poll is going to be for 15,000. The prior was 35,000. So we'll see what happens. Let's see. Do have IBPMI, Canadian data due out at 10 a.m. Eastern. No U.S. data post the non-farm payrolls at 8:30 Eastern. So lots of times we'll sometimes have University of Michigan or any other form of data. Basically, here in the States is going to be non-farm payrolls, and that's it. That's all she wrote after that. Of course, we'll have, I mentioned at the same time, we'll have Canadian data, and then we do actually have wholesale inventories. That's going to be at 10 a.m. Eastern. And then, of course, coupled with IVPMI. S&Ps continue to stay up here pretty close to these upper levels. Sorry about that. Still holding up here at this 33.42 and amazing here. We've held up. I mean, we were looking Yesterday, we mentioned in the morning about a support around 33.33, and that's actually where the market held. I think it was 33.32 and 3/4 or something like that. And then we rebounded, then we came back down, then we rebounded a little bit, and we're just kind of stuck in the middle now. But certainly still holding up higher here with the S&Ps. In crude oil, we've actually kind of been up and down. We've actually come all the way down into the 50s, only to rally back up again, and we're just kind of up and down. Look at that. Rally up to 51, then rally back to 50.90, 51.50. Still relatively tight range overall. And then here in gold, April gold, that is going to be 15.69. This has held up pretty well overall if you think about it, where S&Ps are at. We had broken below the 15.63 and then got into the 50s, and considering with S&Ps holding up, still doing very well here with gold. So we'll go and take a look at the news. So the Aussie and Kiwi dollars find it hard to shake the virus fears. The Aussie dollar was struggling to maintain even a modest weekly rally on Friday, following the 5 straight weeks of losses as worries over the spread of the coronavirus in China overshadowed the fading risk of rate cuts at home. With no end in the outbreak in sight, analysts fear the impact of the Aussie economy will be greater than first thought, with some even predicting a contraction in gross domestic product for the quarter. We have revised our preliminary estimate of the impact of the coronavirus and now expect it to take around 0.5% off the Australian GDP in Q1, said Aussie New Zealand economist Felicity Emmett. Along with a small hit from the bushfire impact, we estimate GDP will now fall 0.1% in Q1. Investors are also still using the Aussie as a liquid proxy for the China in risk in general and selling into any bounce. As a result, the currency was down 0.2 on Friday at 67.16, having topped out at 67.75 on Wednesday. That left it up for 0.5% for the week so far, but still down 4.3% since the turn of the year. The Kiwi could not even manage that, being down 0.1% for the week at 64.55. This is so surprising with the Kiwi because, boy, this run, let's just go and pull this up here. Look at them. Let's go pull it back a little bit. Look at this monster run we saw here for 3 weeks. Look at that. It was just, I mean, if you stood in front of this thing, boy, did you get run down like nobody's business. And now look, it's turned around and given all of that back and then some. I mean, just incredible how this thing ran for 3 straight weeks. Look at that. Just a complete freight train, only to turn around and give all of it all back. Just quite a difference. You know, they're just unbelievable how strong it was and now how weak it is. But getting back to that, the Aussie's only support came from another round of comments from RBA that underlined its reluctance to cut interest rates again. Appearing before Parliament, RBA Governor Philip Lowe made it clear that the risks of taking rates even lower outweighed the benefits of easing, saying it would take a material rise in unemployment to change the balance. The comments came as the central bank slashed forecasts for economic growth in the near term to reflect the drag from bushfires and drought at home and the coronavirus in China, but expects a rapid recovery later in the year. Investors are reacted by sharply scaling back wages for more cuts, with the probability of a 0.25 point move from April down to 22% from 80% at the start of the week. And an easing to 0.5% is still priced in, but not until October, compared to June just a week ago. Boy, that is quite a bit of change. Here, the dollar holds firm until payrolls and virus fears undermine the yuan. The dollar held a near 2-week high versus the yen on Friday on beat U.S. economic data ahead of the key jobs report, while the yuan eased and financial markets remained on tenterhooks as the death toll from a new coronavirus in China jumped yet again. Sterling traded near a 6-week low against the greenback and nursed losses against the euro, dogged by the persistent worries about the negotiations between Britain and European Union for a post-Brexit trade deal. Rather upbeat U.S. economic data and China's stimulus steps give traders some respite from the heightened concerns about the new virus, although the uncertainty about the impact of the epidemic on the global growth looks set to keep most investors risk-averse, at least in the short term. There is a perception that the U.S. economy would be less affected than the virus than China on other countries, so that a factor for dollar strength, said Masafumi Yamamoto. Risk-off trades could take a break because we don't know the true state of China's economy until we see the data for February. There could be some declines for the numbers in China and other Asian countries. The dollar traded at 992 yen on Friday in Asia, just below a 2-week high it hit earlier. For the week, the dollar was on course for a 1.5% increase versus the yen, which would set it for its biggest weekly gain since July of 2018. Also, the U.S. optimism contrasts starkly with jitters in Asia as investors count the human toll of the virus and try to measure how travel restrictions and business closure will impact activity in the world's largest economy. Against the, and I actually meant to say the world's second largest economy, I guess referring to China. Against the dollar, the Swiss franc headed for its biggest weekly decline since August 2019. Sterling found itself on the back foot as concerns about Britain's relationship with the EU following its exit from the bloc returned. Investors are nervous at PM Boris Johnson taking a hard line in trade talks with the EU will need to conclude before the end of the year to avoid a potentially disruptive break in trade relations. With that, let's go on and move into the analysis. So the euro successfully tested the, there you go. The euro successfully tested the chart support at 966, because remember that was our bias chart yesterday. 966, the market held at 964 before it, moved higher. If Friday's NFP numbers are strong, as indicated by the ADP, then we may see 917 when this will be where this will be the support. Resistance is going to be 1035. So we're at 963 right now. We've actually been as low as what, 956, 957, I should say. And that was my concern yesterday. I was trying to let people know as we rallied off of that. And it wasn't a hard rally, but we moved off of that low. I said, hey, be careful. I mean, the key is really going to be the cash dollar index. As long as if we get above 98.42 on a daily close, which we did, really opens the door for this dollar index to move higher. It's going to actually allow this euro to push lower. Yeah, 917. You see, there's that target, and just measuring this from here to the neck gives us 917, and that'll be the support for today. We may not get that strong a number, but if we do, that's certainly the target they're going to be shooting for, and we're just going to go with that for the support. Okay, so it's going to be 917 and 1035 for resistance on the upside. So if we do get, let's say the number comes out weak, so we're looking at 1035 for our bias chart resistance is going to come in right there. Right, coming across here, 1035. And like I said, it might be, I want to say really overly ambitious. We do have some support here at 940. So I'll tell you what, you see that right here coming across here at 940. So let's go with this. We always like to have two numbers when we get on a volatile day like non-farm payroll. So it's going to be 40, 17. There we go. And let's go move into the cable. So cable dropped below the 2980 and was able to find support before reaching bias chart level 2934. That's what we had yesterday, which is 2934. And we actually got to that and even exceeded it. And initially the market didn't quite make it there, kind of moved higher, but we've since got to that 2934. But the immediate target is 2898, which remains in place, and resistance is going to be 3032. So we're actually for a bias chart support. No, I didn't show that, but I've actually got 2867 for an overrun. So let's look at here we go. We've already hit our 2934. Okay, so for today, 2834, 67. So resistance is going to be 3032. So that's going to stay in place. Now we've listed this as a range because we have maintained holding above this 2980. We got a close yesterday, but once again, we needed two consecutive closes and really a little bit further push to say, okay, now we've turned to bearish. But we certainly have made it down to that. We were looking for a move down to 2934. Our target is actually the 2898. 2898 is an intermediate target, but we'll see if we can go and hit that today. And bear with me one moment. My dog just ran up over here, so hang on one second. Okay, sorry about that, guys. Had the dogs run upstairs and they wanted to go out. So but let's go and get back with this. Look at the Aussie dollar. So the Aussie has reverted back to the weakness on Thursday. Going into NFP, support will be 66.78 with resistance at 67.88. We can actually break even lower, but I was gonna, that might look at it 127%, but I think that's gonna push it pretty low. Let's go with that. Hang on. $66.52. So we're looking for 66.78. That's not even much. Oh, that's 66.52. Holy smokes. Hang on. Be a pretty good little fall too. But we'll go with that. And on the upside, 67.88. And let's go move into the Kiwi. And we were just showing this earlier. This is just, I can't even believe this. Look at this. Phenomenal. Literally, I'm not kidding. To me, I think it's phenomenal because if you stood in the way of this thing, you just so got mowed over. And then look at this. Okay, it looks like we've got a, gravestone dude. You're going to fall. Okay, then they run you over. Sometimes you get taken out, and then the market kind of holds out, takes out the stops, and moves lower. This thing took out the stops and then motored higher for 3 more days. And then look, down, down, down. I mean, we are just still completely just coming unglued. But anyway, let's move on. The Kiwi is back on the lows. Initial support on NFP day will be 64.17, which actually confluences with that 64.17, which confluences with the 64.16, which is the 61%, followed by 63.84. Upside is going to be 65.54. Boy, that's going to be a pretty good run if it can make it up there. But that's going to, that is, considering where we're at, that's going to be too much of a stretch. We'll just go with this level, which is 64.93. I mean, we're on our lows right now. So 64.93, if you can get back up there, which is that key level, that'll be enough in and of itself. So 64.93. Obviously, still remains bearish. Oh my God! What? Talk about a fall from grace, which I think that's what I stated on our analysis. I think it was a couple of days ago, or maybe at Monday, and it has been quite the fall from grace on this. Let's go and move on now to the dollar CAD. So the dollar CAD continues to find a ceiling at 33.09. We're still there. We're still finding a ceiling. That's actually 33.09 has been our bias chart resistance since Monday. Friday's resistance will be 33.39, followed by 33.82. Obviously, we got the Canadian data as well, and we're right there on the precipice at 33.09. So I don't want to list that as our bias chart, although XAX has actually worked very well since Monday. We've had that 33.09 in place. A lot of people have been saying, we're going to break out, we're going to break out. I'm like, well, okay, but 33.09 is still sitting there. and you can see it's held up very well. But coming into today, it's going to be 33.39 followed by 33.82. So you can see here, we're looking up here, 33.39. There. You see right there, going with that close here. Right there, closing here, and then 33.82. And support will be 32.30 followed by 32.06. We'd really have to come unglued, but it could happen, but we'll find out. If we were to make it down to, as I mentioned, right down here, the secondary support, 32.06. Just getting some water. I've been absolutely parched. Let me go on and move in now to the dollar peso. So the dollar peso has moved into a new range with the potential move to 1844. You know, we've been talking about that. Let's pull this out a little bit better so you can see that. You can see there. So the dollar peso is moving into a new range with the potential move to 1844. Ahead will be the initial support at 1851. We had that already in place from yesterday. When we got down here, we got as low to yesterday's low as what was it, 1856, so not bad on that. With initial support of 1851, resistance will be 1881, followed by 1888 if we were to see some big turns. So let's go move that. Obviously, you get this, generally not always, but you get some pretty good volatility on NFP day. So henceforth, we're going to have these secondary support, secondary resistance. Let's go move into the dollar yen. So the dollar yen continues its advance with resistance level 1007 followed by 1051. You can see 1007 is huge. If we were to close above that, we'll see what happens. And support is going to be 1039. I think today we'll find, let's say 939. We shall see how today goes out. It's going to be rather interesting. I think we see some pretty good moves today. Let's go move into the dollar index. So I mentioned this yesterday in the chat room, and I cautioned about this. I haven't, like I said, I don't even have a dog in the fight because I haven't even traded euro since last week. I just haven't. If you're gonna, to me, if I'm gonna trade anything, it'd be the cable because at least you get some movement back and forth. And euro's been so much to yawn. But my caution was, even though we held, I had 966 yesterday for bias chart support. We held at 964. We moved off of that. I think we were at 980, and I was cautioning folks saying, hey, look, the thing you got to focus in is on this cash dollar index. If we close above 98.42, the door's open to go to 99.70, and you can see we're doing just that. So the dollar index closed above the resistance of 98.42. Open a test to 99.70. Friday's resistance will be 98.82 with support at 98.11, followed by the weekly pivot of 97.89. We talked about this. Remember, we were talking about this earlier in the week. I said, okay, we're above 97.89. I think we got above that rather early. I think it was on Monday or something. So I think we were coming into Tuesday and go, yeah, but the key is going to be, where are you on Friday? Well, you can see where we are right now, and boy, we're just still going gangbusters on this thing. So got to respect the levels. You know, I like to incorporate the fundamentals or the new stuff because it gives you some meat on the bone. But at the end of the day, whether you have your stops or whatever, you got to base it on the technicals, and because that's what's going to drive these markets. So anyway, let's go move on here. You see, there was our resistance yesterday, and we got above it, and it was a resistance, but it was resistance as far as a level that, hey, if we get above it, hey, we're going to be moving higher, and certainly it's pointing that way. It's going to be 98.82. And 98.11. I'm not going to bother with the secondary. I mean, this has been clear as a bell, this 97.89. So we're down there. We'll know what's up. Let's go into the cross rates. Well, QEN continues to weaken here. This is, it reminds me of the euro versus the AUD last week. Which one's weaker? And you can see the Kiwi's weakening, but the same token, the yen is also weakening. So we're going to be looking here at support today right there. It's going to be at 70.42, which isn't even that far away. I'm not seeing anything of any real significance below that. We can come down here to 70.30. 70.30 is a possibility. Let's go mark 70.30, only because it's the end of the week and we may just see some further movement that direction. So we're going to go, it's actually 70.31. And on the upside, $71.04, obviously that key level. Looking here at the euro yen, same thing here. Same general thought being which was going to be weaker. A run to the, I don't want to say a run to the bottom, but a run certainly more additional weakness. Resistance, support, I should say, 2030. We're not even that far away. It's going to be right there, right here for support. 2016, call it 2017. And resistance, 2094. Well, remember, this is one we were talking about last week. Actually, 2 weeks ago. I'm weaker, no, I'm weaker, I'm weaker, because we kept going back and forth. It just seemed like, but certainly the weakness of the Aussie really has pushed, obviously made a big difference. And then we turn around and here we are sliding back now on the euro weakness. So just on a bigger scale about this, I'm weaker, no, I'm weaker. Um, Looking further out, if we can move, I don't want to push it all the way up to this level, although that's certainly where they could get to, but that seems a bit, at least for today, a bit ambitious. Well, not really. 63.85, 64, no, 64.50. Yeah, let's just go right here with this high right here. 64.23. Thinking maybe we might be able to get up there with the weakness in Aussie. And support right there, 63.01. We'll move into the Euro Kiwi. Well, if you come off these lows here, and Kiwi remains weak, we probably can push this a little bit further. I wouldn't think all the way up here to this level. I think that's a bit ambitious. But you see this low coming in here, so you got a little bit of volume here. So I'm locking potentially move to 71.04 in Euro Kiwi. Support's pretty clear. It's gonna be right there, right where we opened and this close. It's gonna be 70 even. 70 even. Yeah. Well, here's another pair's really fallen from grace to speak of as we would continue to move higher. And we broke below the trend line. Then we broke below 74.02. We did find some support right here at the 61%. So we did have a good little rebound that got us above 74.02. And we're sliding right back again all over. Resistance is going to be just above that right there. You see that? 74.10. That'll be resistance. Essentially, if you're playing for the short side, that's your risk. 74.10. Particularly the 2-hour. There is some support here at the 50%. We're just so close. Let's go right here, just above the 61%. You can see that level here, which is going to be 73.22. And resistance just above here. It's that line that they broke, which is 73, right there, 73.70. Okay, well, the cable's been in a pretty tight range. I mean, the cable, but I mean, the guppy. Um, it's really just going to be about the levels, really, on this thing. A little bit of wider range, but let's take a look on the 2-hour chart. This pair's not really been doing a whole lot, if you think about it. Support from where you would see volume come in, steps in is just right there at 41.81. Maybe a little bit lower right there. You can see here coming across. It's going to be right there, 41.75. And resistance is right there, 42.30. 42.30. If we get a little pop above here. You can see here the volume right here on this, right here at this close, and we actually closed the next day just a hair bit below it. That's actually going to be the resistance where we see the volume coming in, which is going to be 93.81 on sterling versus the odd. And you can see where we broke out of, and that's going to be support right there, that level, 92.71. Well, you can still see this euro remaining under pressure. Dollar index has made it to, actually we had this level from before, or at least I had it from before on the 2-hour right here at 98.58. But we're looking at 98.88 for NFP resistance here. But you can see, boy, what a stalwart run we've seen here in the cash dollar index this week. Dollar yen just easing back a bit. So like I said, I think we're going to see some good volatility today with these NFP numbers. Indeed. Dollar peso even moving higher here. You can see that at 18.72. But I think it's going to be interesting to see how we close them today across the board. But that's what we have for today. Good luck for the NFP, and we'll see you in the chat room.